Camille Knight joins us on set. Hi, Camille.
Hi, Inka.
So, Camille, the markets trade roller coaster continues after President Trump hit pause on those sweeping tariffs for most countries.
That's right, and it's a very different picture depending on what continent you're looking at. European stocks closing higher for the best session in 3 years after Trump's reversal of his tariff policy. The EU's decision to pause its own tariffs for 90 days also playing a big part. Germany's DAX leading gains, closing up almost 4.6%. France's CAC 40 up 3.8%. The US stock market, on the other hand, is definitely sinking back to reality a bit. Stocks falling Thursday, giving back much of the gains from the historic rally seen in the previous session. The Dow plunging 900 points, the Nasdaq down nearly 4%, and the S&P down more than 3%. It comes after the S&P 500 soared more than 9% for its third largest gain in a single day since World War II. But despite that initial optimism, a lot of investors are showing they're not reassured enough, since a delay in tariffs doesn't remove any of the uncertainty that had been rattling the markets. And of course, a number of tariffs are still in place. Most countries are still subject to a blanket 10% levy. China is being hit with a 145% tariff on goods. The White House has clarified that number. And tariffs on aluminium, steel and auto imports are still in place. Now, Wednesday's boost to US stocks has left some prominent Democratic politicians asking who benefited most from the market jump and whether or not they may have known the president's move in advance. They've called for a probe into possible insider trading. Brian Quinn has more.
$100 million.
A hot tip from the ultimate insider. On Wednesday morning, as stock markets continued their downward slide over Donald Trump's massive tariffs on worldwide trading partners, the president advised his 9.5 million followers on his Truth social network to buy back in. Just hours later, he put a 90-day pause on nearly all the reciprocal tariffs that had shocked economists and traders with their scope and scale, sending U.S. indexes skyrocketing. The S&P 500 gaining 9.5% in a matter of hours, the tech-heavy Nasdaq up 12%. Now, Democratic lawmakers are asking who benefited from the sudden U-turn and if they knew in advance.
In any administration this corrupt, it is more than necessary to ask, were people personally profiting from insider information while people's savings, their retirement accounts, were being torched?
Of particular concern is that Trump signed his Truth Social post DJT, his own initials, but also the ticker symbol for Truth Social shares, which shot up nearly 23% on the day, adding $415 million to Trump's personal stake in the company. Up by a similar margin was Tesla, whose CEO Elon Musk has been publicly arguing against Trump's tariffs in recent days, Musk's net worth getting a $20 billion boost. There is as yet no specific proof of insider trading on Wednesday's policy reversal. Trump and his entourage, though, have already come under fire for questionable financial ethics, like using his hotels as pricey lodging for visiting foreign dignitaries, using the White House lawn for a Tesla promotional event, and the launch of his personal meme coin, a purely speculative cryptocurrency that racked up some $100 million in trading fees, even while small traders lost money.
Now, a lot of reasons have been given as to why Trump made the decision to pause most tariffs. Trump said people were, in his words, getting a bit yippy. And though what he means there isn't entirely clear, pressure did indeed come from the markets and not just from stocks. In fact, Trump also said he'd been watching the bond market closely. That's because US government bonds, which are traditionally seen as one of the world's safest financial assets, had also suffered a dramatic sell-off, suggesting a lack of confidence in the country's public finances. The 30-year-old Treasury yield hit a high of 5% overnight, a level not seen since November 2023. It's cooled since Trump announced the pause, and there's a precedent here. Last time something similar happened was in the UK with Liz Truss, Britain's shortest-serving Prime Minister. Truss triggered market turmoil back in 2022 after she proposed sweeping tax cuts, saying she'd pay for them with massive government borrowing. When yields on British government bonds spiked as a result, Truss was forced to go back on her proposed tax cuts, and though it put an end to the market chaos, her credibility was destroyed and she was forced to step down after only 44 days in office. It's unlikely we'll be seeing the same thing with Trump I think he might outlive the shelf lettuce, but at least it shows that he's not completely ignoring the bond market.